I think, geopolitical tensions have been building up now for years. And it's got to do that the financial system is basically still relatively broke. Recovery overall economically has been quite modest despite big rebounds in equity markets. And this frustration right now, which we see moving the economies forward, means that governments will start taking unpleasant steps, and that starts with trade restrictions, increasing taxes, protectionism, and securing basically their own benefits. And so you're going to get more geopolitical tensions, full stop, as trade structures are changing, like you've seen the BRIC countries coming up with the establishment of the BRIC investment bank, World Bank, IMF bank replacement. That basically puts already geopolitical pressure versus the existing system, and you start seeing that the fight on the end for having more independence and more say is accelerating. Particularly in the Middle East, I think all this US meddling we had for the last 10 years in looking at securing energy flows is backfiring. We've been in Libya, we've been in Iraq, we've been in Syria. Now we've got the conflicts in Israel against Palestine. In Ukraine, it's again about energy. It's as well about food. And I think it's that the main areas of conflict which are basically destabilizing today's market environment are moving prices up. And prices are moving up because in a conflict-driven environment, leverage is not really very helpful. What you want to have is the security of your asset and the security of the flow of your offtake. And so it's not your future market anymore, which is the driving force. And that's destabilizing today the financial world versus countries' ability to deliver. And so the geopolitical tensions are growing even faster. Look, I think we have already a fallout of energy supplies in all these conflict areas. So if you can look at Libya, Iraq, Syria, you can look at Latin American countries which have been conflict areas. So we can start with Venezuela, Colombia, Argentina, just to name a few. And you start actually to see that the amount of exportable oil is falling almost worldwide, and it's been replaced partially with fracking in the United States, which is questionable. But basically we have a lack of energy. So these geopolitical conflicts and this ability now to deliver oil through a pipeline means that we will have to look for alternative oil supply and alternative availability of delivering that product. And that means basically overall higher cost and higher price.